Good evening, friends. Welcome back to my channel Infinite Trade. My name is Robin, and today, this is not an analysis video but a new learning video. Okay, so it's been a long time I haven't posted any learning video, and this video is going to be very, very interesting. And this is completely based on a intraday time frame, and you will love this trading style. And whenever you get this setup, you will mostly get it, like I would say, in a month. At least 70 to 75% of the time you will get this setup, and out of the 70 to 75% of the setup, 85 to 90% of the time it is going to be profitable, and the profit can be huge too. The only issue is whenever the market is going to be sideways is when it's going to hurt us. But I'm going to show you all the setup, and we will randomly see charts for the last 10-15 days, and you will understand. Okay, you can go and backtest for yourself. I'm not going to go beyond 10-15 days of charts, otherwise the video will become quite bigger. Okay, so let's begin the strategy. uh, the first thing that you need to know in this strategy is, there was a video that I posted earlier, which was about how to identify swings. Okay, or rather, I would say how to identify pullback. So I'm going to show you an example of that, and based on that example, we'll continue to jump into our strategy. Okay. So let my tool come up. Yeah, here we go. So what is the strategy all about? Okay. So firstly, like I said, we need to know the swings. Okay, so how do you mark a swing? I have shown this earlier. Say this is swing 1. Okay, but with this one particular swing, you cannot identify the trend. When do you know the identification of a trend? Is obviously, see, you have a high here, you have a low here. So whenever one of this breaks is when you will identify the swing. So imagine the high breaks. Okay, so what does that mean? Now we know that this is a bullish price action. So whenever the last high is taken, you mark this as a pullback. Okay, or you say higher low. I mark it as a higher low. Okay, so why pullback? Because only when this high breaks is then we know that this is a pullback that has happened. I hope this is clear until this place. Then how the price goes? Then it say it gives a dip. Now you don't mark anything apart from this new high. Okay, so this is a higher low, and this becomes your higher high. And when do you mark this? Is obviously if this high is taken out, then you mark it as a higher low. Okay, so this is how you need to consider. And there is another example that I want to give you based on a candlestick. Like, when do you mark this as a high? How to understand that this is a top for now? So I may have to use the candlestick's color. Say, for example, our market is moving like this. So what is the price formation here based on a candlestick? Obviously, it's making higher, low, higher, some. So it is not breaking any previous lows. Uh, so when do you actually go and mark the top? Is when there is a candle that broke or that breaks the previous low. So let's consider like this. Okay, so this is my previous low. So here it is broken. That means you mark this as a high. Okay, so this is what we were drawing. Okay, let me show you. So this line is what we were drawing so far. And like I said, when do you mark things like a higher low? Obviously, you need, green candles from here, and this high needs to be broken. Okay, high is broken, that is enough. Maybe with a small wick, maybe just 1 or 2 points, that is also fine. Even if there is no candle closing, that is also okay. But once the high breached is breached, you then mark a line here. So this is your pullback basically, and this is your higher low. So I hope this concept is clear. I would have told you to, refer that video and then come back to this video. But since this is a start of the strategy, I did not want it to, make people go round and round and find this difficult to understand. So I've told you right way in this video. One example we will also see for a sell side. So sell side, how it works. Obviously, the market keeps falling like this. Okay. So now it is like this. So this is your low. And when do you mark a lower high is when further it breaks down. So then this becomes your lower high. Clear? So these are the things that you need to understand. Now I'm gonna tell you another point here, which is based on whatever we learned so far. And this is a very important point to take that particular intraday trade, or this is a main setup. Okay. So market travels in swings. We all know that, right? So whenever there is a last swing, okay, say this is my last swing. So in SMC concept, the last swing is also known as inducement. Maybe in some other day I'll cover this topic. But the reason why I don't cover inducement, all this stuff is, see, I've kept this SMC trading as a paid trading strategy, and I've been teaching people for quite some time now. And this is one of the key level of the SMC trading. So that's what I'm trying to explain you right now. So the last swing is known as inducement. And when you ask me what is inducement, inducement level is basically a level which is used to trick buyers or sellers. Okay. So what happens is, see, people who are uh, into a bullish trade, obviously, as in when there is a new higher low is made, their SL is always on the previous swing low. Okay. So when the SL is shifted here, as soon as this high breaks, you know that people will keep their SL here. And what market does is, when it has to continue to be bullish, it will take their SL and then continue to go up. So this level is known as inducement. And sometimes there can be a trend reversal also, but that trend reversal has a lot of important levels before inducement when it comes to that place, and then it reverses. So both the cases, what happens is, in a bullish trend, the idea is to trick the buyers. Okay. So the first example that I gave you, and that what happens is, just comes to take the SL. In the second example, what happens is, it takes SL and also it induces fresh selling, or it gives an opportunity for the sellers to enter, and then they don't get a favorable target and the market reverses, and eventually the sellers are trapped. Okay, so I hope this particular point is clear. So these are the two things that you need to know, even if you do not know the logic that I told you right now. So this part I'm telling you, even if you do not know this, that's okay. But what is important is the last swing. Okay. So there's one more point that I would like to include, but we will not do it right away. But when we see that kind of an example. So what do we do is I'm going to take the chart a little bit behind so that we see more examples, and we'll cover it until today. So I think we can start from maybe the 19th of January. Okay. So what do you have to do is here on the 19th January, we can clearly see that the price is coming down like this. Clear? So ideally the last line you don't mark. Okay. So why did I say that this last line will not mark? I deleted it. We mark when this low is taken off. Okay. Only then we mark this. So this is my swing and this is my inducement level, like I said, or the last swing. Here, the condition, you need to keep this in mind or write it down when you are actually making notes out of it. The condition is the last swing must be small. Okay. When I say small, means it should be around 200 points. Okay. Not beyond that. Because sometimes you will find the last swing as a very big swing. Okay. You may see more than 300, 400 points. So in that case, it will not give you uh, optimum result. But whenever the swing is small, it will give you an excellent result. Okay. So now let's understand how do we trade this. So for now, let us keep this aside. Also, let's delete all these things. So what I do and how do I trade? So this is my swing low, and this is my inducement level. So let's keep the line until this. So what is the 45,800 to 45,550? Okay. So around roughly 250 points. So see what market did. Market opened gap up, came inside this range. So in case, uh, okay. So when it is coming inside the range, see, market broke the last swing or the inducement level. That means it is going to be, or it is going for a reversal, is what you need to understand. Okay, that's what I told you in the drawing also. So what market does in case of a last swing is, so understand this is my last swing. It will either break this and then break this, or say this is my last swing, or what it will do is it will directly break this and change the trend. So these are the two possibilities that we are looking at. But mostly, if the last swing is small, you may always see an reversal uh, day on that particular trading day, and this is only for intraday. Okay. So what market did, you can clearly see market opened gap up and then it took support here. Okay. Then went up, but it couldn't break the high. So market gave a jump, then slowly, gradually came inside that trading range again, and then it gave you a nice move. Okay. So here now I'm not going to cover how I go and take an entry, what is the setup that you need to see, or what is the candlestick pattern that you need to see. I assume that whoever is watching my video are already trading, and I'm just telling you which is an important level where the price will take a U-turn. Okay, so I normally don't take an entry here because it did not fill the gap properly. So I usually wait for it to come until this place, So it came to that place and it had put a hammer, and then it showed a reversal. This time it broke this high, and that's how you trade it. Okay. I hope this example is clear. We will see more examples so that you get a fair idea. Now, uh, let's continue this day also to understand what happened here. So here, if you go and see, yeah, here I need to mention that point. But this is not that particular example, but we may see going forward also. So what is that example is the price is, say, moving like this. Okay. Now say the day is closed here. Now you have a higher low here, you have a high here, and then you have a higher high here. Okay. So wherever the market opens within this range, this is going to be a little confusing. Okay, flat opening. But imagine the market opens here. So automatically this becomes like this, and this becomes your new higher low or the inducement level that I'm talking about. So a lot of times in the last swing, you will not identify both the levels. You may have to wait for it to open the next day. So in this case, uh, see, this is the swing. But when do I mark this as a swing low? Only when the next day market opened breaking this high is when I mark this as a higher low or inducement. Okay. So now coming back to the strategy. So in this price action, the first inducement level is this. Okay. Till the time the market has not opened here. Next day, market opens here, breaking this high. So what you do automatically is you shift this to this place. Okay. So now this is your inducement level. I'm not saying that here also you have to take a trade while the inducement is breaking. You can do that, but here the trade setup was something different, or it could have been something different. We could have taken a put right at the top, looking at some previous resistances. But for now, uh, just think that this is your inducement. So whenever the inducement breaks, you can definitely go and take a trade. Okay, but the condition for our strategy, I told you that the last swing must be small. It should not be beyond 200 points. But if you look at this, it is 45,933 and the high is 46,573. So close to 500, 600 points range. And then it is breaking down. So this was a trending day. Hence, if you would have taken a trade here, you would have made money. But other than that, this is not advisable for a day-to-day trading on a daily basis. Okay. So here our last swing is this, but market open gap down. So we'll avoid this. And now we can have this as an example. So this is again a small range. Okay. When I say small range, so this is an inducement level when it broke the next day with the first candle. Okay. Otherwise, your inducement was somewhere here and it closed the higher note. But your line gets shifted here. Let me show you that clearly. Or I think let me draw that once again. I'm sure people might have been confused here. Okay. So when do I mark this high? Only when this low gets broken. Okay. This low was broken by the first candle. So automatically this becomes your last swing high and also your inducement level. So the first candle broke the low. Now you got this inducement level. So if it is continuing on the downside, you continue to take a put trade. Okay. And when I say reversal, look at the reversal that happened the next day. This is the same inducement level that it was, and next day it acted as a support. But this is a different level now. Since the market is constantly coming down, your inducement level also changes. So now in this case, what is your inducement level? This. See, as soon as this level gets broken, there is a trend change that happens. So this is what I'm trying to explain you. The smaller the swing, the larger the movement, the strongest is the movement. So I hope this is clear. People who did not understand, you can watch this video a couple of times to understand. So now we'll see more examples wherein there is a small swing. Okay, there is another example of 30th of January. So see, this is my low. Okay. But when do I mark a line here? Only when this low is broken. This low was broken on the 31st morning, first candle. So automatically this level becomes my inducement or the last swing. So when this level breaks, you are going to go for a long trade. See, as soon as it broken out, then it continued and sustained higher on the on that particular day. So I hope this is clear. We remove this drawing. We see more examples. See, in this case also, the swing is smaller. So this is the okay. The lowest point is here. Okay. So when this low is broken, so this high becomes my inducement level. Okay. Here the market was sideways, so hence see it confused us the entire day. And also I think the swing would have been a little bigger, 46 180 and 45 865. So 965 065. So almost more than 300 points. So that's why I told you in the beginning it should be around 200 points. Then the swing works great. Okay. In this case, on the 2nd of Feb, so here it took my SL and then I had to take a re-entry on the put side once again. So try and identify the swing. So market continued to go up. This is the pullback level. So for buying level, this is my inducement because this high was broken here. And see, when this level was broken, it consolidated, but eventually it came down sharply. Okay, so the reversal happens on the inducement level are quite stronger. So here, if you have to mark the last swing, this is the high. Market remained sideways the entire day. If you have to see this, okay. So only when market crosses this level is you will see a reversal. But for that, we need the swing to be a little smaller. So similar day, next day also. And this day continues. So why this day continues is understand. See, this is my last low. So this is my inducement. And market open gap up. And it is constantly coming down to this level. So no level to break out or no level to change the trend, or there is no smaller last swing to do a reversal. Hence, it is doing time pass. So a lot of times I come to know that market is going to do some time pass today. See here, it gave an excellent entry. So this is my new high. So this is my last low, which is an inducement. See, when it broke it, it fell down like anything, and it continued to fall down. So this is a trend line break. So I'm going to cover a separate topic on this next time. So how to draw trend line. You will see, or you would have seen a lot of people drawing trend line. You yourself might be drawing a lot of trend line, but the trend line that I'm going to teach you is going to be completely different, and you will be shocked to see how a trend line really works. Okay, so that, let me see when I can post that. Okay, now here. So what is the last swing? So this is my swing low. This is my swing high, and the next day there is another low. So that is on the 9th of Feb. There is another low. So what market did? Went up, came inside, then it broke out. Okay, it broke out. It gave you a re-entry. So I had taken entry here, and my target was achieved here. And then the rest of the day I did not trade. So it gave a re-entry, and see how it went up beautifully. And now today, how we could have been traded. So I mentioned that today I was a bit bullish because I saw put shots from both the big players. However, the call longs that pros had might have given them trouble, hence the market came down. So I took a put, but I went OTM. But anyways, that OTM made good money. So in this case, see, the high was broken here. So this level becomes my inducement. With this red candle symbol. As soon as it broke it, I took an OTM put and then just see how the market fell. So this is what I traded today, and as soon as I made money, the first thing that came in my mind is we see a lot of these days quite often. So I thought, let me just post a video, and people would love it and watch it and make money. Okay. If you ask me how do I consider the entries or how do I determine my entries, you can post that questions on Telegram or maybe in the comment section in this particular YouTube. In case if there's a video that is needed, I may record that video and post it. How do I take an entry? But for now, I hope the concept is clear. And for the next few days, watch them and practice yourself, do some back tests, and then come up with questions, and I'm here to answer. So thank you for watching. I hope this video makes a difference in your trading style. And let's meet in another video, and the analysis video will come tonight. So thank you for watching. Let's meet in another video. Till then, take care. Bye bye.